Hello traders, this is Blake Morrow with ForexAnalytix, and you are listening to the week ahead video for March 10th, 2019. Hope you guys and gals are having a great weekend. Now, before I get started, I just want to say if you're in the New York area and you are at the New York Traders Expo that starts this weekend, make sure you stop by the ForexAnalytix booth. Make sure you see all the guys that have come in for the trade show. I wish I could be there. Obviously, I'm not there. I'm here filming for you guys. I'm here in Scottsdale, Arizona. But we have Steve that came in from Athens, Greece. We have Grego Horvat that came in from Slovenia, and we have Joe Perry, who's from the area, who will be at the trade show. So if you are not, or if you are in the area, make sure you stop on by. And I know they're getting together for I think drinks tomorrow. Tomorrow being Monday, the 11th. So just, you know, if you're part of the ForexAnalytix community, or you just want to stop by and say hi, make sure you sign up right here with your name and email address, and let them know that you're going to stop on by. So okay, enough about that. Now, if you haven't tried out ForexAnalytix and you want to do so, it's only $1 for 10 days. $1 for 10 days. Try it out. Okay, and once you do that, download the mobile app so you have all of our analysis, our chat room, our private chat room, by the way, all on your, you know, in your hand at your fingertips. And when we push out analysis and new updates, you'll get them right there and then. Okay, so let's talk about this next week. Actually, what we should probably do is talk about the price action last week really quick, and specifically, you know, let's just talk about the euro dollar. Really important pivot yesterday, or I say yesterday, so it wasn't yesterday, it was actually on Friday. Anyway, a really important pivot off of the 618 retracement on a weekly basis. Okay, so even though the currency pair dropped to new trend lows on Thursday and we broke below 112, the bounce at the 127% extension of the last move higher, you can see the 127% extension, the major 618 retracement of the 2016 lows to the 2017, is it 2017 highs? I thought it was 2018 highs, but 2017 highs. It took us right to the 618 retracement, which was at 111.80, roughly 85 or 80, so you can just call it 80. The fact that we bounced from there, and obviously we had weak employment data in the US, that raises a red flag for anybody who is long the dollar. And mind you, I actually have some dollar longs personally that I'm running right now, not in the euro, but that is a little bit of a concern, because if the dollar continues to lose strength against the euro, you know, is it going to bleed into other currencies as well? So really big reversal on Friday. Now, as far as the charts go, other than, you know, hitting that key confluence of support, the candles aren't, you know, super convincing. I mean, this is from a candlestick perspective, the euro dollar is just an inside day. So that's a neutral stance versus being a bullish, you know, reversal. That doesn't mean that we can't go higher. It's just, you know, it's not super convincing right now. So obviously the beginning of the week, this next week, is going to be pretty important from a price action perspective. Now, you know, if you look at the euro and you go to the dollar index as well, let me pull up the dollar index here for you. It's the same thing, basically. And if you look at the dollar index, we ran right up into really key resistance. Now, you might look at that resistance and go, ooh, look, a triple top. It's not a triple top. It's not a triple top until it proves itself a triple top, which would be maybe breaking back below the 200-day moving average. Then, you know, as dollar traders, you would be looking for a move all the way down to the low 90s in the dollar index. Right now, it's just resistance. And frankly, with higher lows, consistent highs, it's more of a bullish wedge than anything. You know, if we get any setback towards 96, you know, you're going to see buyers down here, or down towards the 200-day moving average. You're going to see buyers down here. Now the question is, are we going to make it the whole way all the way down there? I don't know. But you can see the 618 on the 618 golden fib level. We always talk about it. The dollar index, it's the same thing. You know, you have the 2016 highs for the dollar index, the lows. It was actually the dollar index 2018 lows, and that's, you know, right up at the same level of resistance. So we just know that key resistance resides just above around 97.80. Now, if you think about it though from a risk reward perspective, it makes sense from a risk reward perspective to short the dollar. Okay, does that mean the dollar is a good short? You know, I'm not here to answer that question for you. I personally think that we're in a range in the dollar. I don't think it's breaking out just yet. And I can still build a pretty good case for dollar longs and dollar shorts. So when I have that conflict inside of me, where I can really argue both sides of the coin here, then that means that, to me, that we're probably going to be range bound, and therefore dollar shorts are probably the better trade right now. However, I think being short the dollar specifically is going to be more of a where if you place dollar shorts, it's going to be more currency pair specific versus just blatantly shorting the dollar. Now, I'm going to take you to a chart that I think is going overlooked right now. Okay, and that's why I want to take you over to the bond market. Now let's take a look at the bond market, and this is a pretty important chart here. If you look at what happened with the 10-year, okay, the 10-year obviously has been, you know, we rallied, you know, through the end of last year, and you know, it's rising without much risk aversion right now. Okay, you can see how we're moving higher towards the highs without much risk aversion right now. But one of the reasons why we aggressively rallied, you know, November, December is, you remember the sell-off in the S&P. Here, I actually happen to have the S&P right here. You can see the sell-off at the end of the year. Well, you know, bonds rally, a little bit of risk aversion and, you know, flight to safety or whatnot. Now, the bond market looks poised to go higher. The reason why I say that is you had a triangle pattern, a breakdown, only lasted 2 days. Then we had a reversal out of, you know, back into the triangle above trendline resistance. We stalled at the 127% extension for right now. But the fact of the matter is, if the 10-year bond market starts rallying and breaking out, that's going to signal a couple things. First and foremost, going back to the S&P, is probably continued risk aversion. You'd see the S&P, you know, probably continue to break down here, which I think is potentially going to happen because of this key resistance at 2820 held. So if we see a sell-off in equities and we see a rally in the bond market, okay, going back to the 10-year here, that's telling you that yields are going to come down. Now, if yields come down, again, we were talking about dollar strength, dollar weakness. If yields come down, what are the best currencies to play in that situation? Well, I think you want to take a look at the dollar yen. Okay, here's a daily chart of the dollar yen. We're back below the 200-day moving average. We're piercing some trendline support and a slight ascending wedge, but this has been a hell of a recovery. I mean, we went, now those spike lows, you may not count those spike lows, but you can say we roughly went from 107.50 to 112. That's a pretty big rally. And would it be logical to believe that the dollar yen, if bonds rallied and yields dropped, would it be realistic to believe that the dollar yen sees 110 again, especially with the, you know, the US Japanese trade negotiations probably looking to really get heated in the coming months? That's possible, if you ask me. The dollar yen coming down to 110 is not a big ask for the market, right? So that's one place. If you're going to focus on dollar shorts, you know, the dollar yen might be a place to look. Another place to look, in my opinion, would be the dollar Swiss. Now, I traded the dollar Swiss unsuccessfully this week. I shorted the dollar Swiss right here at this, and I'm going to show you the trend line. At this trend line, it popped above, stopped me out. It was a really tight short for me. I got stopped out for a loss. I was like, gosh, man, this thing's going to really break out. I'll have to wait till the end of the week. And obviously, the week jobs report pushed the dollar back down, and so what we got was a false breakdown. That was when we were up against that resistance. Let me go to the weekly chart. We got a false breakout of this multi-year downtrend line here on the dollar Swiss. Now, that's important to me, especially if bonds rally, yields drop. One of the more sensitive currencies to bond yields would be the Swiss franc, the dollar Swiss. It's got a parallel relationship to yields. Same with the dollar yen. That's why I'm talking to you about both of them right now. So if the dollar Swiss gets below, like, 1.0050, I think for me that signals that, hey, this was really a false breakout here, and we might look for a move back below parity, maybe back towards the 200-day moving average, maybe all the way back down to this upward sloping trend line that's a long-term upward sloping trend line. You can see it's a it's a year-long trend line here. All right, so again, if I'm going to trade the dollar on the short side, I'm looking at the dollar Swiss, the dollar yen, and really want to make sure that bonds continue to rally and yields continue to fall and stocks show some signs of weakness in order to employ that type of tactic in the FX market this next week. All right, now a couple other currencies I should talk about really quick. The Aussie, we are trading really close to some dangerous areas. I mean, if you're long the Aussie, you got to be a little concerned. I mean, we're probing the 70-cent level, and frankly, we get below 70 cents, and you got a little head and shoulder pattern here. I don't like to look at head and shoulder patterns as continuation patterns. In this case, it'd be downside. We'd have a continuation pattern lower, but a lot of traders do. Frankly, it's just below 70 cents. You can call it a head and shoulder pattern. You can say I just call it pretty key support. So if we break through 70 cents, can we see 69 cents? Can we see 68 cents again? I think it's a logical path for the Aussie, considering the ongoing China-U.S. negotiations. Now, obviously, the market is looking at a more favorable China-U.S. trade, outcome, or at least something to get done. But why, I ask, why the Aussie has underperformed? Probably because any trade deal that gets done with the U.S. and China is going to weaken China's economy even further, and it's going to take away a lot of capital from Australia and New Zealand and giving it to the US. So I think whatever is bad for China is going to be bad for Australia, and therefore it's probably the good reason why that the Aussie is really underperforming at this point. But that you also should keep in mind, any positive China trade news might spike up the Aussie just near term, which frankly would give us a better place to short the Aussie as at a higher price, especially on any favorable headlines out of China. Okay, couple last things. Let's go over the Canadian. So the dollar Canadian, if you guys haven't seen it, we're in a big inverted head and shoulder pattern. Yes, we came off a little bit here on Friday. Why? Well, we had stronger Canadian data, weaker US data, so naturally the dollar Canadian came down. So what do you make of it? Well, personally, I think that any dip down to 133.50 is going to be a good buying opportunity to play it back up towards 136. I don't know if you guys saw it, but crude oil, even though it recovered on Friday, let's get over to the chart, even though it recovered a little bit here on Friday, let's go back to the daily chart here. You can see that little hammer, pin bar. But anyway, a sustained break of like 55, and you see relative strength is divergent here. It's starting a point lower. Any break below, or a sustained break, let's say daily close below 55, that's going to be bearish crude. And if it's bearish crude, then that means it's probably bullish the dollar Canadian. We're going to see the dollar Canadian continue higher. So again, personally I'll be looking for dips, down here as possible longs, 33, 33.50, somewhere down there. Also, one last currency pair I want to go over. Let's talk about the U.S. dollar Mexican peso. I've been trading this to the upside. I gotta find it here. There it is. I've been trading the U.S. dollar Mexican peso to the upside. Why? Because we're in a long-term. You can see a long. Actually, you know what? Let me take you even. I'm going to take you over to the peso, and you can see this like longer term. I'm going to do it even a different way. I'm going to go to a chart that I can actually draw on. I'm going to pull up a different feed here, and this is perfect. The U.S. dollar Mexican peso. You can see this is a big pennant. Now, I mean, if you look at that and you go, well, Blake, if you look at this pennant, I mean, does that mean that this pair could go to 26? I mean, it could. It could. I don't see it going that high, but even trading it back up towards 21 on the dollar mex, it seems possible. And if you look at you look at the charts. I mean, we broke this up. We broke the 200-day moving average here. 1947 was a breakout point. Any dip back towards 1940 is going to probably be a good long. That's a retest of this little. See the red lines here? It's a retest of this triangle. That might be a good place to be on the long side of the dollar Mexican peso. Then, if you think about emerging market currencies weakening as the S&P weakens, which is a pretty strong correlation, typically speaking, that's something to take into account as well. There's only one piece of data next week for Mexico, and that's industrial production on Wednesday morning. So that something else to think about if you're trading the peso. Speaking of things that are coming out next week, and by the way, if you're an unfortunate soul like me, the daylight savings time happens this weekend. Even though the state of Arizona in the United States does not adhere to time change based on where we're at, meaning I never change my clocks. Unfortunately, the rest of the world does. So I have to get up an hour earlier for the next 7 months or so. But we do have a time change here in the U.S. And now remember, time change in the U.S. is 2 weeks different from time change in Europe and the rest of the world. Don't ask me why. I'm really time change stupid because we don't deal with it here. So I'm the wrong person to ask why and how and but anyway, regardless, it is happening this weekend here in the U.S. As far as the next week and what data is happening, on Monday we have retail sales. Oh shoot, I forgot to talk about this. We have retail. I have a lot more to talk about actually. We have retail sales on Monday, but more importantly, Tuesday and Wednesday, we have Parliament votes out of the UK that can really move the cable. So I guess I should talk about that here in just a second. So we thought we were finished. We're not. So we have GDP out of the UK and manufacturing production numbers, which probably aren't going to move the needle because of what's happening in with the Brexit votes. We have on the 13th, or actually, excuse me, on the 12th, we have the Parliament Brexit vote. And then on the 13th, we have the House of Commons. They're going to vote on whether or not the UK is to leave the EU without an agreement. And then on the 14th, the House will vote again on postponing Brexit and probably prolonging the negotiations. But a lot of this is already factored into the cable, but we might see a relief rally in the pound. And if you didn't see what happened with the cable on Friday, I'm going to point out that we stopped at the 200-day moving average. I actually tweeted this too. We stopped at the 200-day moving average, the 618, the 38% retracement, 38% retracement of this move, 618 of this move, and the 200-day moving average right at on Friday, and it bottomed out shortly after I actually tweeted that. But as long as we hold above 130 roughly, or 129.50, there might be a risk of a move back towards 131, 132, and maybe even the big neckline of this inverted head and shoulder pattern back at 133 and change. So watch the cable next week. It's going to be pretty important. And this is where I want to tell you, you got to be kind of currency pair specific if you're looking to trade the dollar. This is not a currency pair personally that I'd be playing dollar strength against. If we have some dollar weakness, that this might be a good play, playing cable strength dollar weakness. Okay. Other couple other things that are happening this week. We have on Wednesday we have durable goods orders, producer prices out of the U.S., and then Thursday night, Friday morning we have the BOJ meeting. So obviously a few things that are happening this week. And guys and gals, if you watch this video and you go, man, this is a really great video to help me in my week ahead. If you're watching on YouTube, hit the thumbs up button. We all appreciate it here. My team that works tirelessly on these videos to do these for you, between them and myself, we really appreciate the thumbs up, and also click the bell icon so this way you get notified on your desktop or on your mobile devices anytime that we post a new video, whether it's an interview or just our normal free face webinars. If you didn't happen to catch us live, you can actually watch the recording a couple hours later. And guys and gals, I hope you have a great week next week. And remember, time change. I'll be getting up a little bit early. I'm going to be a little grumpy tomorrow morning when I'm on the face webinar. Expect that. I'm giving you some fair warning. You guys and gals have a great rest of your weekend. My name is Blake Morrow with ForexAnalytix. Talk to you soon.